This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of July 25th, 2022. A daily podcast summary is one of the benefits you receive by being a subscriber at TF Metals Report. It's just $15 a month. And clearly, as the week ends and we move into August, it's time to get back involved in the precious metals. So please join us at TF Metals Report. In what we may look back now as the ultimate sign of the bottom in the precious metals and the mining shares, we spent a lot of time on Monday the 25th discussing Newmont Mining, the world's largest and really at this point oldest gold mining company. The stock had fallen 50% in 3 months, and the daily RSI had fallen to an extremely bearish and oversold 13. Now, at the end of the week, we can look back at this as a sign of the bottom, but as it happened on Monday, there were a lot of head scratching and eye rolling, wondering what the heck is going on. So here's part of our discussion from Monday, July 25th. Take a look at Newmont on the daily chart. Okay, as oversold as it was, it hasn't been this oversold since 1987. Well, okay, how oversold is it? The RSI is 13. For good luck, it's actually 13.13. How can you beat it? Newmont, just 3 months ago, middle of April, so 3 months and a week ago, 100 days ago, 86. Today, 44. This is the largest gold miner in the world, isn't it? Now, gold prices come in, 15%. But their stock's been cut in half with an RSI of 13. Check it on the daily chart. Now again, the monthly chart. What am I saying? Again, this takes you all the way back to beginning of 1991 or 1992. This is when I was a stockbroker trying to convince people that the losses I generated by selling them, Walmart or Coca-Cola, at least you got a dividend. Sad thing is, Newmont's not a lot higher than it was 30 years ago. Now, again, the key in these things, as in most of the time in stock markets that go up and down, unlike today's stock market, is being able to sell high and then buy again low and that sort of thing, which of course I haven't done. All I've done is just hold on since I bought so many of them back in the fall of 2015. But you can see there's a little bit of a trend line here on this monthly chart, and we are getting close. You would think there would be support here. See that peak in 2016 that I was just talking about? When Newmont went from, 17 to 45? What's that? That's 250%, just like the Hui went from 100 to 280. But it peaked out then at about 45. And then as it came up in early 2000, it banged around 45, and now here we are, 45 again. This should be a support level. I don't know. Maybe I'll buy 100 more, but should with a capital S, capital H, and then O-U-L-D. We'll see. But man, that's pretty ugly with an RSI of 13. Tuesday the 26th brought the first day of the July FOMC meeting, and fortunately prices began to stabilize. But with the volatility that was coming later in the week, we thought we'd probably revisit the important support levels for a number of items, especially COMEX gold. Just last week, price had dipped to $1,680, which is a very important support level, having tested that level a couple of times around this time last year. We tested again last week. It's an important support level going forward, and that was all part of what we discussed on Tuesday. But let's start with the weekly chart of gold. Again, this goes back now to, this is just the last 5 years, okay? And again, coming out of that period where we got smashed in 2013, went sideways and down all the way into 2015, rallied in 16, pulled back. So as you come out of 16 and 17 and into 18, we're in a pretty tight range. We're on about a 10% range, really, from 1,200 up to 1,350. And then, of course, you know what happens. The Fed, Powell pivot number one, the rally, and then COVID and the rally. So since then, you can see where we've been kind of, again, I guess we'll just call it flagging, going all the way back now over 2 years. The lowest closing low I can find is that red candle in early June of 2020. I remember that. That was when you all sent me on that vacation. And we closed then 1676. You can see what happened next. I mean, we just took off from 1676 all the way to about 2076 in what, 2 months? But we've come down to this level multiple times, including last week. So, right now we're 1715 on the August contract that goes off the board in a couple of days. What we want to avoid on Friday, if all hell breaks loose with the Fed and the markets collapse and margin calls and liquidity concerns and all that stuff, pretty clear we need to maintain a weekly close above 1676. Because below there is probably another $100 of downside. We sure as hell don't want that. So watch 1676. Hopefully we won't even sniff it. I was traveling back from vacation with my family on Wednesday, July 27th, so we did not have an audio podcast that day. We instead had a written summary that I was able to craft from an airplane. By Thursday, the 28th, though, the events of the Wednesday, the 27th, and what Powell said and what Powell didn't say had really had a major impact on the precious metals and the mining shares. Gold was up substantially. Silver was up more than $1, but the mining shares had yet to move in tandem. Now, usually the GDX follows silver very closely. As you can see on this chart, however, a gap has opened between the two. If silver keeps going higher, the GDX will probably rush to catch up at some point. Does that create a trading opportunity? Well, that was something we discussed Thursday, the 28th. However, the GDX stopped in its tracks today at its 20-day moving average. Okay, you can look at this and say, see, that doesn't confirm it. Everything's going to go right back down. I don't know. I doubt it. Maybe instead you should look at this as a trading opportunity. Because if gold is projecting, if it can hold now tomorrow and into next week, gold is projecting what I say, 1800, 1820. Silver projecting 2050, maybe as high as 22. And moving to its 50-day. Well, how does the GDX not look like it's going to rally 10% from here? We certainly had no trouble calling 10% drops from 29 to 26. Why does it not look like it's going to go back to 29? That would be a tradable rally, wouldn't you say? Let me give you one last thing. Here's the GDX as a blue line and silver as candlesticks. You can see that correlation. I don't have to just cherry pick dates. This goes back years, this tight correlation. And you can see the underperformance today. So the data persists, the squeeze persists, and we rally strong again tomorrow. Or at least just even hold these gains and rally next week. You got to figure GDX is going to catch up. And what? You look at this chart, a $21 silver price. Look on the y-axis on the left. That equates to about 30 in the GDX. Hell, maybe even higher. And yet the GDX is 26. So I'm going to watch closely tomorrow. I have no hurry to rush back into the casino to buy some calls, but I'm telling you, some August calls in the GDX that would expire on about the 19th of August or so, $28 calls, something like that. I might be interested. We all hinge upon what happens tomorrow. And on Friday, the week ends with silver continuing its rally here into the end of the month. Looking like we've gotten the first signs of a Powell pivot, a Fed shift, much like we got the first signs in December of 2018. The eventual Fed policy change came about 6 months later, and that's probably what we're on track for now. So the lows are very likely in for the precious metals, and we should begin our recovery. Silver rallying again today into the weekly close, up $1.27 yesterday, up another 35 cents today. Critically, back above $20. While the GDX is also back above 26. Both of those are the signs we've been looking for as the first sign of a turnaround. Now, so far, it's just been short squeezing, but that's how turnarounds begin. So we'll look to see what happens next week. A very busy week next with the manufacturing and service sector PMIs for July, and then, of course, the all-important July jobs report next Friday at 8:30 Eastern. The Fed now being data dependent, that data becomes pretty important. Silver looks to extend up to its 50-day moving average probably as soon as Monday, and then we'll just have to see if it encounters some resistance there. Likely will. and then we'll see where we finish the week next week. But the lows are in, and so I would very much encourage you to take advantage of the coupon code that we have at TF Metals Report that'll last only through this weekend. It expires on Sunday. You can get 50% off your first month at TFMR and join the great community there simply by selecting a monthly subscription option and then entering the coupon code HUNTER at checkout. Your first month will be just $7.50. If you stick around, you'll renew a month later until you decide to cancel at the regular rate of $15 a month. We'd love to have you. And now that we've made it through the storm and things are headed higher again, now's the time to join or rejoin TF Metals Report. Thank you for listening. We'll have another one of these podcast summaries for you next Friday.